Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So I think, what is this now, the fifth down day? And, we were talking on the VTF and trying to figure out, why are we so hyper-focused in certain things and why does this time feel a little different? Because it's just, I think the dynamics of what took place were different than the past few times, okay? Because we were very overextended into that Fed meeting and we pushed to 1729 and gave that back real fast. So on the fifth down day, we're down about 40 handles off the high. It feels like we just had a major pull-in, but we're just right around the 21 day. The S&P's at 2% off the highs. And, we're all trying to play this little, bottoming bounce type trade, and it just doesn't feel right yet. So it's just like when that's the case, again, we said this morning, low gross, low net, and no one really wants to get caught here holding the bag with what's going on in Washington or the October, weakness that could persist. And considering the type of move we've already had this year, probably up like 19% or so as of now, and up a lot more than that for the past few years. So if you're in one of those positions where you're like, I'm a little thrown off or I'm a little spun around, you know what, that's fine. Just don't over trade and give back money or lose money for no given reason. If you look at the chart of the S&P, you'll see that so far, you want to talk about a few trends. Let's go to the SPX real quick. The SPX, we've been navigating this pretty well, for the majority of the year. This was, November, okay? This is when that red dog reversal, the rally started. This is when we took out, last year's high of right around 472. And this was the last time, I think this was the debt debate or whatever it was here. And I remember that time everyone was trying to buy it here and was so battered and bruised by the time this took place. It was just tough to, get your bearings. So anyway, with that said, really nice move all the way into May. Had that outside day. I guess what happened here also, you bounced back a little bit. So they gave you some trades. Like you had this outside day, follow through, bounce back up, we wedged, and then broke lower. So remember, this was a very tradable move to the downside, and then it tested it, came down, went to the 50-day, bounced really well, came back down, bounced the second time, and then this was a breakout failure here, if you remember, that wound up giving you that fast, furious move all the way down here. So with that said, that was your low, here's your digestion, this is when we resumed the rally. And then let's look a little bit over here, what took place, what transpired, if you're trying to figure out, how to trade this and what to look for. Here was, we pushed through here, squeezed the shorts. We said if we could hold above it, maybe we continue. We went back below it, then the bears, protected this area. Things started to weaken. You had this head and shoulders mini top. This is where I put on some puts. This is where a lot of people started to think bearish and made some money to the short side. So both of these times, pretty, tactically, we could have made money short and then resumed the uptrend. This time felt a little bit different because I don't think anyone, maybe I didn't, no one really took advantage of this pull-in. So, because you had the breakout above here, so finally, the guys rolling it up who thought we would fail into September probably got squeezed out. And those who might have played this move and, maybe didn't have much risk on or added risk into this move, might have, are underwater now. So with that being said, here is your 21 day in the SPX. We're not even at the 21 day in the SPX. So we went as low as what, 1691. This is as high as 1729. So about 40 handles. So after 40 handles, you haven't really been paid much by shorting on the fifth down day. Okay, but at this point we haven't really been turning yet. So I guess at this point, continue to do what we're doing. Where now you have this descending little channel here. We know how to handle with the red dog reversal. You have 1691, which is tomorrow's low, or today's low for tomorrow's trade, just in case, and continue to do what's been going on here. So, for me, I came in today and I'm like, what could help the S&P rally? And I thought it would be the banks and the home builders, and the banks and the home builders seemed to be fine today, but they didn't help the S&P's rally. So, what did happen though, I think the number one trade for the VTF and definitely for me today was JP Morgan because of the size of the pullback that it had. I'm like, okay. Third down day into major support. If they can't break it below 50.30, I think, it's a good technical or tactical long. So you look at JP Morgan, and here is that setup, right? This is the macro head and shoulders pattern that a lot of people started chirping about yesterday, but obviously a lot of people already made some decent money short here, whether it was right there or whether it broke right here. So into this area, I'm like, you know what? I'm going to look for a long. And the beauty of being on the virtual trade floor is this. So if you come back to me, a lot of people like the dots connected. They like it on Twitter. They like it everywhere. If you subscribe to some of our stuff, you know that I have off the charts. We have the price point sheet. You have my morning note that you can get for free. And in the morning note, I would say, listen, if the banks could bounce, the S&P will get a better, maybe more footing. I'm going to watch JP Morgan and see how it handles 50-30, which is the red dog reversal. So, you go back. I came in with no JP Morgan today. So those that, try and connect the dots, like, okay, well, it says watch JP Morgan, said it in the note, had it over here. And if you're on the VTF, you saw I came in with no JP Morgan. And then this morning it went green, meaning I executed on the strategy that I was thinking about it, because I'm not just an educator. We're not just idea generators. We are traders, and that's how we make a living. So you look over here, and you'll see this was this was a strategy right here, 50-30. Went as low as 50.06. Okay, you had to think quick, really quick, but 24 cents risk on JP Morgan that came in from 54, let alone the highs here. Still considered one of the most quality banks. And look at the move you had today. Really nice move in JP Morgan. You go to the 3-minute chart to see how quickly it happened and the how fast and furious it was, and there were a few different trades. Here it was. Look, anyone who said, oh my goodness, the head and shoulders pattern is going to trigger to the downside, they got short. Anyone who used that as a level to get out because they started buying it too early, that's why this is such a good action area. Okay, and then from here, it went quick, and then I remember, futures headed lower right around here, and this is when a lot of us like, oh, JP Morgan held in really well, and that's what you could do on the VTF. You could listen to us talk on the radio. I added right here, sold into that, kept some, and then you had another trade right here. What do we call this? A bull flag, right? Here's your pole, here's your flag, there's your continuation. Then there was news out that they might settle for 11 billion. What did it do? Came into support, then bounced off that pretty well, and then it closed okay. So with that said, nice tactical cash flow day trade without figuring out whether or not the market's at a low or at a bottom or whatever. But what didn't happen is that this really did not help the S&P or the spiders if you were trying to play that. So at this point, very engulfing bar. Perhaps it continues a little bit more. Still has a lot of work to do to work off this potential pattern, which is still out there. Okay, but again, it's come down quite a bit, so it needs real severe weakness for that to happen straight from there. So see if the bears could protect this 52-ish or this 52.50, and if they do, perhaps you get another chance at this from the short side. But for right now, this was a nice move for the day. Home builders, if you look at them, also held up pretty well. So another feather in the bull's cap today, so to speak, held in there and held above this area. But again, spiders did not play a part. Okay, it's still dribbled down, and that's where it's going. So at this point, the spiders are already at the 8-day, I think, because they went ex-dividend, so they took a little bit out. But here's your next area in the spiders. Here's the gap, and here is the 50-day. Okay, so we'll see what happens if it could hold here. Maybe we'll get that chance. But overall, still hasn't happened yet. So with that said, other things to do, we know what happened with Walmart, the news that, demand was weaker. I'm not going to get into that whole release. And then they retracted it, but it still remained weak. You look at the chart of Walmart, it didn't bounce back from that. So that didn't help either. Everyone's like, oh, now we could just buy them because it's, not real. But anyway, still some skepticism there. What's really weird is you look at Target, Target, that chart looks horrendous. Okay, look at that. There's always times to get out of things. Okay, this is where it broke out from. Here is your trend. Gap down, never filled it. Traded like, another gap down. And I know it's targeted and all, but, oh, look at this even too. Look at this ascending channel right here, this potent day to the downside. That changed that trend. Okay, and then what happened? Couldn't get back above it, couldn't retrace half of that, so that stayed in control, and then it continued. So with that said, you always have to be aware when some trends change. A lot of the momentum names that people say can't go any higher because of valuations, they can until something changes. I want to give you a quick example. in the 3D printing stocks, we've been all over them for the majority of the year and then some. Triple D's given us some trades, SSYS, and remember how strong XONE was earlier in the year, okay? But when a valuation type stock or a high P stock or a story type stock trend changes, you have to take notice. And it happened right here in XONE. And you haven't heard us talk about it. You haven't heard Mike LeVay or any of those guys. They've tried it here and there. But right here is when this trend changed. Okay, so this was a very strong trend from the IPO following the 8 and 21 day. Here was one spot that got a little tricky. Okay, then this was another look at that earnings. It came right back in. And this is when the trend changed. And this was your confirmation. And then it's been out of play since. Okay, so that's when a trend changes. And even, I hate to say it, on Zillow, a lot of people have been complaining about that valuation the whole time as well. When you trade these momentum names, you have to look for subtleties, little things to take notice, so this way you can change and switch gears quick. And when it was up here looking like it could have a bull flag based on the move, when it's been holding the 21 day, this was a day to try and play it. And what happened? It broke out, couldn't go. So if you're playing this for momentum, that was, you had to get flat. If you were in it saying, okay, I'm going to give it till this flag breaks down or until it breaks below the 21 day, on this day, when it engulfed this entire flag, this momentum stock changed. It's not pent up anymore. It's not going to make new highs any second now. And, that was your 2 days to make decisions. And now if you're in it, it's not easy to deal with. Now you almost have to give it to here. So people are like, when is, the trend in Tesla going to change? We've been talking about this strong trend. We've been talking about the 21 day, I don't even know, for since almost 80. Okay, one day went below it on the Goldman Sachs saying, it's an $80 stock when it was high up there in their Goldman Sachs. So for one day it was below, but that was an opportunity. So with Tesla, I know it's a story stock, a high valuation, high PE, but this trend is intact from here as well as the 21 day. Okay, one day you could have gotten out of it here. If you were riding this trend this whole entire time and you saw, this little bit of an outside day and you saw this get breached, because I think some guys made money short right there, this could have been like, all right, something changed here. Maybe this was a top. But then what did the stock say? It engulfed it right away. And then what did it do? It digested the top third of it showing strength, and then it continued. So now here we are again. It's looking pretty solid. If you, had to take something home, this looks like it's something to do, but it's getting, as it goes higher, it gets a little bit more risky to do so as everyone's writing articles. All the shorts are still trapped. But anyway, nice bull flag. Hopefully it doesn't gap up huge tomorrow. It opens in line, and then if it gets stronger, we can play it for another trade. But ultimately, this is a strong trend. Do not short strong trends. Wait for something to change, like you saw in XONE, like you saw in Zillow, whatever. Same thing goes for Netflix somewhat. Actually, no, let's go to Facebook, because Facebook, a lot of people have been trying to short, okay? You look at this pattern here. It's been unbelievable since earnings. It gapped up above, the prior resistance. And, so if you didn't have it in the company handle pattern, this is when you started to focus on it. And then here you go. Nice little flag, buyable spot, continued, corrected, buyable spot, followed the 8 day. And then here on this day, this potent down day could have gotten you out of the stock if you've been in it ever since the move from earnings. Okay, but what happened? Okay, it went below it for a day, engulfed it. So that said, this has no power. It's back on track. It could have went like this, held sideways and continued. It didn't. So you measure that. And now it's continued. And even today, I tried to short it a few times today based on them selling it off yesterday, and it didn't go down. I actually I only lost a little because they give you one little way out. But ultimately, this trend is still strong. I know it's extended from the 8 and 21 day. It doesn't mean you have to be all in by it, but doesn't mean you should be fighting it short either, or at least rolling it up until something happens where you get a day like this and it doesn't snap back. So with that said, I think we're in a tough spot in the market where, they were down 5 days, but it's like a slow, trickling, bleeding type of move lower, where you're getting these small intraday moves, these 80-20 red dog reversals, where you buy it on weakness, you have to sell it into strength, but then you're worried if it finally continues and you don't have enough. So when it finally looks good and you add to it, it pulls back in, and then you've ruined your good cost from the red dog reversal tactical area. So it's like a conundrum. And then what happens is you start taking small little paper cuts in these 2-3 days, so you start to increase your size because you're like, when this trade actually happens, I better be in it, I better have size. And when it doesn't happen, you're continuing to mount some of these paper cuts, and the paper cuts are getting wider. So with that said, don't do too much. Something will tell us when, perhaps we could resume the uptrend, or if things are that weak and, this might be another 4 to 5% correction, or maybe even a little bit more, because, that does happen. But anyway, it hasn't happened yet, but we have to be on the lookout. You can't fall asleep behind the wheel. So all in all, there's a lot of frustration, I know, in my row. I think in the site, there's been some spots that have avoided this little pullback and have been easier than others. And I know a lot of people got thrown off last week, whether you were short gold and it ignited through and you're covered, and then you went long, and then it pulled back the 2 days thereafter to go lower. And then, there's been a lot of, I would say, what's the good word? Frustration, or a lot of, things that beat up both sides. So I think both sides have pulled back, and that's why the volume is light, and that's why there's a disinterest, and that's why there's a dislocation because of what happened last week. Like we said also, traders don't know what to react on. Bad news, so they keep QE. It used to be bad news, and you could buy it because, that's what the trend was. Bad news, you buy. And then for a while, when news started getting good, we started to sell the good news because, like, oh no, they're going to reduce the pace of purchase. And then after a little while, market got used to it, saying, oh, okay, you know what, QE worked. Okay, economy's getting a little bit better. So now maybe we buy good news, and we're okay with rates rising. So we were going into last Wednesday accepting the fact that, you know what, 10 billion is no big deal. The trends that we've been watching, rates a little bit higher, gold down, this, that, buyable pullbacks. Then all of a sudden, all right, they did nothing. So now people don't know how to react. And believe me, this is a reactionary market. So with that said, if you're a macro investor, stay the course. Keep putting your monthly funds in. You're going to be fine. If you're an intermediate trader looking for P&L, and that's how you make your cash flow and pay your bills, it's a tricky spot. And don't put yourself in a hole if you're, a little bit, turned around. For me, this has probably been one of my tougher months of the year. So I'm trying to keep it in perspective, because typically October, November, December is the best quarter for traders. So, but you won't see it unless you actually, aren't too frustrated. So with that said, we'll take it day by day. There are some good trades out there. They do build, but if you're in something and you have an opinion and the trade changes, just get out of the way. I know I came into this week all bulled up on Google. I was so excited. I think I had this line here, like if it codes here, this looked really good to me that it could go, that it held up on Friday when the Dow was down 185. And P.S., I got stopped out on this day, okay, here. Let me get this line out of the way because this did not happen. Bad memories. And I changed it changed. 895 for me was a way out. Okay, and I know if I would have held through this, and this, my loss would have been 4 times that. Instead, it hurt when I took the loss. It was bad for a Monday after my birthday weekend, but I said, you know what? This is no longer bull flag, intact, ready for momentum. So got out here, and then this was another decision area, which wound up closing lower. We'll see what happens with Eric Schmidt on TV today, but ultimately, this was the spot for when this trade changed. So if you acknowledge it and stop yourself out, fine. If you're a macro investor in Google, I don't think it's really, this may not be the top, and you probably get, higher prices. So if you got out short term, when you get some type of reversal pattern like you saw here for that, make sure, you act on it, because hopefully, they'll do it intraday so you could handle that. And lastly, I'll just talk about Apple. Pretty frustrating, right? You had that big gap up on the iPhone news, and then nothing the next day, and then today it was flat and closing the lows. I traded it once. I tried it from the long side, and then I think most people just got away from it. These lines are all kind of old. This is when it had a tight and failed, and then here, measured the whole way up. And now, if you want to really make this chart a little bit more current, here is your resistance. I would say I would even take this out of the way. Now this is your new little trend here, but it's starting to lose momentum again, starting to lose interest. It's still kind of heavy. Tomorrow we'll figure out if it does some kind of red dog reversal into today's low. It's already broken into the gap a little bit, so some of the shorts got out, and some of the bulls are starting to say, oh, maybe it's not as good. So anyway, it's still in the upper end. It's just at one of those days where tomorrow you have to focus on it, and if you You know, unfortunately, if you bought it when it's up into this area, you know, you lost money. And Apple used to be a really nice momentum stock, and it hasn't been for a while. We had a nice little taste here when you saw some momentum. You could have bought higher and sold higher, but ever since then, it's been a gap and trap and sleep and beep and this and that, and you know, just don't do too much there. And with all that said, today's Wednesday. They call it hump day because you're over the hump of the week. And tomorrow's another day, and we'll get to figure out whether or not, you know, we find some footing, whether the correction continues. You know, IBD is not even in big picture market under pressure yet. I wonder if they go into that today on the 5th down day. You know, that probably says we're ready for a bounce, and then we got to see what kind of bounce, if it's feeble. But you know the drill. I got to go. Parents are in town. Scott Redler, T3 Live. See you tomorrow morning with Brittany. Have a good night.